Early movers, Bob, KO, CMCSA, ANTM, AAPL, TWTR and more. Check out which companies are making headlines before the bell. Boeing lost 44 cents per share for the second quarter, much smaller than the 92-cent a share loss analysts were expecting. The loss was due to previously announced charges stemming from the 787 KC-46 tanker and other programs. Revenue beat estimates, and while Boeing cut its full-year forecast to account for those charges, its forecast is above street estimates. Coca-Cola beat estimates by 2 cents a share, with quarterly profit of 60 cents per share. Revenue missed estimates. The beverage maker said international headwinds were more severe than anticipated, and that the macroeconomic environment worsened in the quarter. However, the company did see a 3% rise in organic revenue, thanks to better pricing. Comcast, the NBCUniversal and CNBC parent, earned 83 cents per share for the second quarter, 2 cents a share above estimates. Revenue also came in above forecasts. Comcast registered a 3% increase in revenue per cable customer over a year ago, and also saw good results for its internet and video businesses. Anthem, the health insurer, earned an adjusted $3.33 per share for the second quarter, 10 cents a share above estimates. Revenue exceeded forecasts as well. The company also said it remains committed to completing its planned acquisition of Cigna despite a Justice Department lawsuit aimed at blocking the deal. Waste Management, the waste disposal company, earned an adjusted 74 cents per share for the second quarter, 3 cents a share above estimates. Revenue also beat forecasts, with the company benefiting from better pricing and volumes. Garmin, the maker of GPS devices, earned 87 cents per share for the second quarter, 20 cents a share above estimates. Revenue was far above forecasts as well. Garmin also raised its full-year forecast on improved sales in categories such as fitness and outdoor products. Apple's stock jumped after quarterly profit of $1.42 a share beat estimates by 4 cents a share. Revenue also beat forecasts. Additionally, Apple gave strong current quarter revenue guidance, and reported iPhone and iPad shipments that were higher than analysts had been estimating. Twitter reported adjusted quarterly profit of 13 cents per share, beating estimates by 3 cents a share. Revenue was below forecasts, however, and the company also gave lower than expected current quarter revenue guidance. Revenue growth during the recently completed quarter was the slowest since Twitter went public in 2013. Hilton, the hotel company, missed estimates by a penny a share, with adjusted second quarter profit of 25 cents per share. Revenue was also slightly below forecasts. Hilton also gave a full-year forecast that came in below estimates. Linear Technology agreed to be bought by rival semiconductor maker Analog Devices in a cash and stock deal worth $14.8 billion. The transaction values Linear at $60 per share, representing a 24% premium. Panera beat estimates by 4 cents a share, with adjusted quarterly profit of $1.78 per share. The restaurant chain's revenue also beat forecasts. Comparable store sales at company-owned locations were up a slightly better than expected 4.2% compared to a year earlier. Buffalo Wild Wings reported quarterly profit of $1.27 per share, 2 cents a share above estimates. The chicken wings restaurant chain saw revenue come in below street projections as same-store sales fell from a year earlier. Anadarko Petroleum lost 60 cents per share for its latest quarter, a loss that was 20 cents a share smaller than expected. The oil and gas producer's revenue was slightly above estimates. Cost-cutting helped Anadarko avoid a bigger loss. U.S. Steel. The company reported a loss of 31 cents per share for its latest quarter, smaller than the 49-cent a share consensus estimate. The steelmaker's revenue fell below estimates, however. The company said it is seeing an improving pricing environment and that its European operations saw its best results in nearly 8 years. Match Group earned an adjusted 17 cents per share, 1 cent a share higher than forecasts. The dating services operator also saw revenue come in above estimates thanks to an agreement in paid subscribers for Tinder, Match.com, and OkCupid.